All right, welcome back to the Breakout Watchlist from October 3rd to October 7th. In this video, I'll be covering the top 10 setups going into next week. And huge disclaimer, I understand how bad the market is right now. These are very much just setups to watch, not actually to trade and to trigger on. I'm actually staying at my parents' house this week, so I don't plan on doing any trading from the long side or from the short side, given that we are oversold in the short term. Now, I say that we're oversold in the short term. We can get more oversold. Things can crack. All the market crashes have come from oversold territories, so we got to be very cautious on both sides of the aisle. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of these setups. And as a bonus, once we're done with the 10 setups on the long side, I do have 5 potential short setups that we'll cover very quickly. Here are the 10 long setups that we'll cover. We'll get right into it. Make sure you like and subscribe. The first stock that we'll cover is CCRN. This is a traveling nurse company, and that group in itself is pretty weak, 137 out of 197. But this stock has a really nice technical pattern, shows great relative strength, so we'll get into that. Earnings per share rating, 99, very strong there. Accumulation distribution, B, not the strongest. Ideally, we get A+, where we see heavy volume days coming on up days, low volume days coming on down days. And I mean, B is an okay rating, but it's not the strongest it can be. Overall composite rating, 98. That is extremely strong. The highest is 99. And we have an individual relative strength rating of 97. You see this composite rating of a 98 because of how strong the earnings, the sales, and after-tax profit margins are as well. So it's a little hard to see this, but we do have a nice big cup here with a lower second kind of shakeout. So we shook out the weaker hands from $17 all the way down to $15. Buyer stepped in just above 15, which is a nice round number, showing some buying support there. We shot very quickly up to 30, so we basically doubled here in a couple weeks. But with how deep that base was, how deep the sell-off was, it made sense that we would get right near all-time highs and then pull back again, which we do from 30 to 25, rally back up to 30, check back to the 50-day moving average, this red line here, and buying support comes in here. So each time we pull back, it's getting tighter and tighter. So the first one was nearly a 50% pullback, then a 33% pullback, then about a 20% pullback. Now this can continue, especially if the market is weak going into next week. But what I'm looking at is if we pull into the 21 EMA, that did support the price action 3 of the last 4 trading days. So maybe a potential entry around 27.50 with a stop loss right under 27.50 there for CCRN. Next we have FREY. This is an energy alternative and other. That's the 17th strongest group out of 197. A few weeks ago, that was actually the 4th strongest. So we could see that group also kind of losing strength as the times go by. So we've got to be a little bit cautious there. Earnings per share rating, 61. That's weaker. Accumulation distribution, B. Overall composite rating, 90. And really the most important thing, because price is all that matters, relative strength rating, 99 there. This did have a couple days where we pulled back to the 21 EMA, then rocketed forward, pulled back to the 21 EMA on the 20th, also had a rocket higher to put into new highs. And since then, it's kind of hard to see here, but we're just trading sideways. And that's exactly what we want to see as the indexes continue to push lower. We don't really expect this to rally and make new highs. The fact that it did as the indexes were pushing lower was great, but we don't expect that. So starting to trade sideways, starting to see volatility tighten up, and we still see respect for the 21 EMA. We never closed below that, even in this terrible market conditions. So ideally, we do kind of trade sideways for another week because this price action is still really volatile. But if the indexes can find its footing, this is kind of a basketball being held underwater, and we'll look for a break over just Friday's high, 1480 for FREY. Next, we have the biotech stock, KRTX. If you have been watching my channel, you know this has been on the breakout watch list for a couple weeks now, and very much a technical play, especially with biotechs. You're always going to have a couple biotechs fighting against the overall trend because they tend to trade just on their own. But what put this on my radar was this massive 71% gain on basically 1,000% of the daily volume. So huge change in supply and demand in this stock. And we actually rallied up a little bit higher, up to 278.25. From then, that's kind of when the S&P 500 hit the 200-day moving average, and we started this terrible, terrible sell-off in the market. And while this is a sizable pullback through the 8, the 21, and now to the 50-day moving average, this is very, what's the right word? Very like subtle, very controlled pullback. You don't see down 35% one day, up 20%. This is a nice just downtrend and on lower than average volume for the most part, except for the 16th. And we do see buying support come in at the 50-day moving average. We have not closed below that yet. And then on Friday in the morning, as the market was finding its footing, this did rally up to the 21 EMA, but unfortunately got rejected right at that area. So I would like to see this kind of trade sideways for the next maybe 2 or 3 days and then challenge that 21 EMA as the market's finding its footing. And it should have no excuses not to push higher, as this relative strength is really holding steady. So as the market's selling off, this is selling off as well, but it's not selling off more aggressive even after a 100% move on massive volume here. So that's KRTX. Next, we have a lithium stock, LTHM. That's in the chemical specialty group, which itself is not super strong, 49th out of 197. So B+ group strength rating, B accumulation distribution, but a 99 overall composite rating along with a 97 individual relative strength rating. So the 99 composite is because fundamentals have been off the chart. Earnings per share this last quarter up 825% year over year. Sales up 114. After-tax profit margins improving by 33%. So fundamentals are there. Technically, this is a really strong pattern as well, because we have the first kind of cup and the low here at 1955. Then we make a new high, then immediately sell off and shake out the weaker hands because we undercut the low of the first. So a really nice double bottom base here. And then we run right back up to 35, but we do not buy breakouts in a bear market, so we're not chasing this higher here. We're waiting for a pullback like we're getting right now. And over the last week and a half or so, we've been respecting $30 for the most part. We've closed over that area, closed over the 50-day moving average the entire time. So we're looking for either continued market weakness, bring this down into the $30 range, and then start to build a position around there. With a stop loss under the low here, let's see, 29.61 there. So we want to keep our stop loss under the 50-day, under the low here, and as tight to $30 that we could start building a position, the tighter we can keep our stop loss, and then just take a paper cut if the trade does not work out. So that's LTHM. Next, we have a solar stock, MAXN. Energy Solar is still the strongest group in the market, number 1 out of 197. So we have an A+ group strength rating there. B+ accumulation distribution, 80 composite because we do not have the positive earnings per share, but sales are increasing the last 2 quarters year over year, about 35% there. And we do have an individual relative strength rating of 99, so that's obviously very strong. We just put in a new high, let's see, was this the 19th? Before the market continued to push lower. We don't really expect stocks to continue to break into new highs as the market's selling off as aggressively as it has been. So we did get a pullback under the 21 EMA. We did close under that once, but the next day we had a nice move higher, up 12.5% on above average volume. And again, the market continues to sell off a little bit, but on Friday we're up 1.5%, closing back over the 8, the 21, the 50, and the 200-day moving average. Great relative strength here. I would love to see for this individual setup more market sell-offs on Monday and Tuesday, really tighten this price up, and then look for a downtrend line break or a lower pivot in the second half of the week. So no really clean entry point just yet. If it just takes off, then a break over Friday's high, 24.40, as a potential entry point for MAXN. Next, we have the software security stock, NSSC. This is a thinner traded stock, only about 200,000 shares traded a day. So if that's too illiquid for you, just skip this part of the video. For me, I'm just watching this because we put in a new low, I guess in February 1st, and then we never undercut that, which is, I would have liked to seen that, but we have been railing very strong, up 100% since, when is that? Since May. Not many tech stocks are up 100% since May, so we got to keep an eye on this, even though it is illiquid right now. B+ accumulation distribution, 97 composite, 97 individual relative strength. And this type of price action, while the market's selling off super aggressively, is exactly what you're looking for. I'll be looking for just a break over Friday's high, 29.73. This $30 pivot seems a little obvious, even though it's an illiquid stock. So I would want to try to get in a little bit under 30 and then sell into the first kind of pop to 30, 31 area. At least sell a portion in, so we're bringing down our downside risk there. We did close under the 8 and 21 EMAs on Friday, but this is a really nice constructive flag after putting in some new highs with the market selling off. So that's NSSC. Another tech stock is next, PCTY. This is in computer software enterprise, which itself is not a very strong group, 91 out of 197, but this has a 98 earnings per share rating, very strong earnings, very strong sales, after-tax profit margins, all those good things. Does not have a strong accumulation distribution rating, so that's one strike against the setup, but 95 composite, 94 individual relative strength rating. We've been holding 230 and this gap when we pulled back down, so I actually like stocks that don't fill the gap. It just shows that buying support is coming in even before that. And you'd think with this kind of market sell-off, we would have filled this gap after a heavy volume breakout to the upside, but we have not. Came in, put in a higher low last week while the market put in a substantially lower low, which is showing that relative strength. That's why you got that relative strength line in a nice uptrend there. We did close right on the 50-day moving average on Friday, but we have a nice kind of 2-day pivot at 250 along with the downtrend line right around that area. So looking for a break over 250 for PCTY. Next we have Sweet Greens, and this was an IPO that I was watching for at the first part of this year and then kind of forgot about it when it broke under all the key moving averages. Now we're forming a nice launch pad setup where you have the 8-day, the 21, and the 50-day all within the same 2% or so of each other with price above that, those moving averages, and that's exactly what we have. You've seen price tightening up, volume kind of on the right type of pattern where heavy volume up days, low volume down days, even while the market's aggressively selling off. So you're starting to see relative strength put in new highs. Relative strength right now is only at 71, but this is a name that it's building a pivot under kind of like a key area of potential overhead supply right around $24. So one where we can get in under $20 and then sell into that move towards like 22, 24 and that 200-day moving average, which is just starting to appear now. It's in retail restaurants, 28th strongest group in the market. But outside of that, it's really just the launch pad setup and the volume pattern that I'm looking at for this. And looking for a break over Friday's high, 1907, maybe just start it at 19 so we can keep our stop loss fairly tight there for Sweet Greens SG. Got two more stocks on the long side. The first one is SGML. This is another lithium stock and really like the leader in the lithium space. Continues to put in higher highs and higher lows along this pattern. Price is over the 50-day, over the 200-day, over the 8 and the 21. Another name where I would like the market for this individual setup, I would like the market to sell off again Monday, Tuesday to kind of pull back into the 8 and the 21 and really allow this downtrend line to form up a little bit better so we can get a tighter stop loss by the 8 and the 21 EMA as well. That way we know if we get stopped out, chances are this is actually rolling over and at least kind of coming down to the 50-day moving average versus we're getting stopped out on normal volatility. Where if you buy with a break over Friday's high, then you still have, let's see, 4% to the 8-day EMA, 8% to the 21 EMA. So you can get normal volatility pulling back to those key moving averages, and you're taking an 8% loss. Not something I want to be doing, especially in a bear market. I'm trying to lose as little as possible. So SGML, another lithium stock that could just use a little bit of tightening up before trading it second half of next week. And the last stock on the long side is the biotech stock VRTX. Biotech, fifth strongest group in the market, 99 earnings per share rating, A+ group strength, 99 composite, 96 relative strength rating with a relative strength hitting a new high on Friday. This is one that we popped over the 50, the 8, the 21 EMAs on Wednesday, continued to press higher or just closed higher on Thursday, and then made a higher high and higher low on Friday, eventually ending the day down 1% while the index was down around 2%. So prices above all those key moving averages. The market continues to sell off. We pull into those. Want to see that area hold. We got the 8, the 21, and the 50-day right at the same price. So another kind of check back to that area could form a launch pad, just like we were seeing in Sweet Greens. So this is VRTX. And on the short side, I just want to cover these really quickly. First, we have Amazon trading under the 8-day EMA, under the 21, under the 50, under the 200-day. All of those are in downtrends. It's in a weak group, weak accumulation distribution rating, weak earnings, weak sales, after-tax profit margins on the downside. And this is one where we attempted to rally on Friday, closed right at the low of the day, Relative strength rating is in a downtrend as well. So just looking for a break under Friday's low as a potential short entry point with a stop loss at Friday's high there for Amazon. Another stock that has been especially weak is Dutch Bros, BROS. It's a coffee shop, and similar to Amazon, under all the key moving averages. We're starting to see heavier volume days on down days versus the low volume rally days up to the key moving averages. Another one that closed right at the low on Friday and actually took out the previous lows. So the ideal entry point would have been breaking under the lows from this last week on Friday. I did not take that short just yet, but this definitely seems like it wants to at least test $30 before finding some support. So that's Dutch Bros. Got a sports gambling site, DraftKings. I don't know why you would be sports gambling during a recession. So one that I've been kind of monitoring for on the short side. We had two nice rallies up to the 200-day moving average that got rejected once and twice. We cut through that 50-day moving average last week or 2 weeks ago, formed a nice little bear flag under the 8-day, and we're just looking for a break under Friday's low as a potential short there for DraftKings. And the last two short setups are both on the real estate. We have Redfin and Zillow. It's kind of hard to even explain how bad these stocks are because the chart looks so abysmal. On a weekly chart, you can see this went from $100 all the way down to $5, and it could still go lower because it can still go down 100%. It does not matter what the price is. We're under all the key moving averages on both of these. Heavy volume selling has been coming in, and we're building out just 5 or 6 days of trading sideways the last week or so, and then closing right at the low on Friday. So this is one that I expect more new lows as the market continues to sell off in the next week. And that's going to be the breakout and breakdown watch list for the upcoming week. If you guys enjoyed the video, leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. Have a great week, stay safe, and I'll see you guys in the next video.